Good morning and a very warm welcome to all of you. The annual report of your company for the year ended 31st March 2025, along with the notice of the AGM, report of directors and auditors have been sent to all shareholders whose email IDs were registered with the company. Copy of the annual report has also been uploaded on the website of the company and the stock exchanges. With your permission, I take these as read. Financial year 2025 was a year marked by geopolitical uncertainties and domestic market evolution. However, AFL continued to lead the transformation of the Indian fashion industry, aligned with the changing preferences and aspirations of consumers globally. In a dynamic business ecosystem, we remained at the forefront of the apparel industry's growth at the back of our portfolio of globally recognized lifestyle brands. We continued to deliver sustained value to our stakeholders with the promise of enhanced growth going forward. India today stands tall on the global economic landscape as one of the fastest growing economies, demonstrating strong fundamentals despite the volatility in international markets. The recent US tariffs have only served to strengthen the domestic industries by limiting import competition. Driven by young population, robust domestic demand and key reforms, the country has maintained a positive outlook with growth expected to exceed the global average in FY26. In this backdrop, the Indian apparel market delivered robust performance in FY25, with the market shift towards branded clothing enhancing demand for branded fashion, catalyzing growth in the organized retail sector. A structured retail industry with increasing investment in branded outlets, multi-brand stores, and e-commerce platforms is further driving the growth of the industry. Retailers are expanding their product portfolios and enhancing the shopping experience of consumers through tailored offerings aligned with local preferences, as the country's regional diversity adds another layer to the apparel market's growing appeal. Emerging trends like sustainability, athleisure, and the influence of digital platforms are rewriting the rules for the industry. Our ability to target regional aspirations through tailored, affordable products lends our brands a pan-India appeal, which we continue to harness with our robust retail and seamless omni-channel presence. Our dynamic and trendy marketing campaigns, driven by various collaborations and strong social media presence, are further boosting our visibility. As a pure-play branded fashion company, AFL's focus remains on keeping itself abreast with the changing trends of the fashion world. This keeps us well aligned with the changes in global fashion and equips us to meet emerging fashion aspirations. Now turning to our performance. Net sales value of your company for FY25 increased by 361 crores to 4620 crores, an accelerated growth of 9%. Strong investments in marketing yielded positive outcomes marked by like-to-like growth of over 5% across the portfolio. Aided by a reduction in discounting, sourcing efficiency, and a richer channel mix, we showed an improvement in our gross profit, which moved up by 130 basis points. Our sharp focus on operational efficiencies and cost optimization helped to drive operating leverage, resulting in higher EBITDA margins. I'm very happy to inform you that the EBITDA is now close to 14%, gaining 100 basis points to rise to 637 crores, which is 17% higher than the previous year. We also successfully improved our working capital due to all our interventions in supply chain. I'm delighted to inform you that AFL crossed the milestone of generating more than 20% return on capital employed this year, and we hope to continue to improve upon this going forward. We have also achieved a reduction of debt of nearly 75 crores in both gross and net levels. Looking ahead to FY26, the recent uptick in the overall demand environment has given us a sense of optimism on future growth. As demand improves gradually, we expect our growth rates to increase in the coming quarters. The positivity in casual wear segment, higher disposable income, and a favorable macroeconomic situation with lower inflation and a reduction in interest rates will enhance our future growth prospects. All our growth drivers are in place, including net square foot expansion, continued L2L growth, adjacent category growth, product innovation and premiumization, sustainability initiatives, and digitalizations, which is driven by our online B2C growth. Our sustained investments in these growth enablers will lead us on our journey of profitable growth, resulting in further improvement of EBITDA and FCF generation. I am confident that with your continued support and trust, we shall scale new frontiers of growth going forward. I would like to take this moment here to thank each and every one of you and all our stakeholders for partnering with us in this thrilling journey. I also extend my heartfelt appreciation to my fellow board members for their invaluable guidance. The future beckons us with immense possibilities, and we shall together capture them to build a stronger, better, and more engaging brand, Arvind Fashions. Let me end by expressing deep appreciation to our valued customers, vendor partners, financial stakeholders, regulatory bodies, and especially our dedicated employees for standing firmly with us. Thank you once again for your continued trust and support. I now place before the meeting the business mentioned in the notice of the AGM to raise if you are exporting to the US. So, in terms of impact directly on our revenues, there is none. But because of the Trump tariffs, there is a lot of other reforms being planned, one of which being a big boost to Indian consumption with a big GST cut. And if that cut does come, there would, of course, be a strong positive to our company because we are a domestically focused company. Also, on the sourcing side, as all the manufacturers in India look to diversification of their markets, there are a lot of larger players who will look to work with domestic companies like us. So I think it gives us a little bit of a benefit in working with our domestic vendors on the sourcing side. There was a question on cotton prices. Cotton prices are generally been flat and trending lower. Recently, there was an announcement of a cut in import duty on cotton, which is also a positive, which has reduced cotton rates a bit. So, whatever benign cotton rates there would be, again, that could be an advantage to our company. Gauravji asked for our capex plan. We typically have a 100 to 125 crore capex. We are an asset-light business. Most of our stores are open through the franchisee route, so we don't have very large capex. He asked about Gen AI. Gen AI is going to be central to our future. I think it is going to lead to tremendous efficiency gains on everything from pricing to sourcing to forecasting and various other things, marketing. So we have invested ahead of the time. We have built an analytics practice, and we are going to ensure that we lead the business when it comes to all things related to machine learning and generative AI. Our CSR spend for the year has been 2.5 crores. Badriji asked about the regional tastes. I think this is one of the strengths of Arvind Fashions. We sell across the country, and we have a roadshow model where we get all our key partners from across the country to come and select relevant merchandise and give us feedback on merchandise, and that's what makes our model very regionally efficient. We are able to create the right regional taste for every part of the country. And on the cost of garments, we believe in having the right price value proposition. So we want to give our customers a better product for as good a price as we can afford to. So we are constantly improving a cost efficiency in our sourcing, but at the same time, we are premiumizing the product, adding more value to the product, so we delight our customers. Manojji asked about our future plans. As we have told the markets, we are a profitable growth focused company. We are hoping to grow this company at a 12 to 15% growth rate and keep improving our bottom line EBITDA percentage by 50 to 100 basis points every year, and thereby really grow our free cash flows very, very strongly over the next 5 years. Whatever are our cash surpluses, we are using them to pay down debt. So that is the main use of our surplus cash flows. Vinodji asked us about store opening. We open 150 stores, give or take. And our net square feet addition, typically our aim is to increase it by 15% a year. Our full price sell-through ranges between 55 to 60%. That's what we sell at full price. And Club A is a new format where we are selling all our brands under one roof in a 3 to 5,000 square feet format. So I think this covers all the questions that were asked. And I think there being no other business, I now formally conclude the meeting. And I heartily thank all shareholders and my fellow directors for attending and participating in the AGM through the video conferencing. I extend all good wishes to everyone and their families. Thank you so much.
Thank you, everyone.
Perfect. So we are done with the meeting, Lipi.
Yeah. Yes, sir.
Great. Thanks. Thanks for all. Thanks to